August 16th, 2023. Whenever you get a strong spike on the open, you should immediately be looking for some sort of measured move of said spike. Today, 1 to 4, you can see we went down that amount. That's where the 57 low was. And I have one other example of this on June 26th that we got. Pulling it up, you can see that the opening 3 bars we got, June 26th, you got a measured move down of them, and that's right where the low of the day was. So you should pretty much always be thinking about that whenever you start to get a measured move, or whenever you start to get really strong spike on the open. You usually will get a measured move of it in one direction or the other. We also got a leg 1, leg 2 today, a rather big one from bar 20 to the 45 low. You can see that was the first leg, and then we got the second leg from 61 down to the end of the day. You can see the channel ended here, and we essentially got a triangle. Something that's important that I said yesterday was, you can see here, bar 9 and 10, I noted that was an inside-inside pattern, and sometimes you get a sell climax, and then you get an inside-inside pattern and a breakout, and it failed this time. But over here, you can see we got a buy climax, and then on 53 and 54, we got an inside-inside pattern after a buy climax. Just means bar 53 is inside 52, and 54 is inside 53. Essentially means the market is contracting, and when the market contracts, think of it as like a spring that you're contracting the spring, and then it'll pop. That's the best way to put it. And so when you get that 354, you can take the short, and maybe you take it yesterday and you lose a little bit, but you make a good amount today, so it evens out as a good trade in the long run. What's really notable about today is we weren't able to get back to the low of Monday, which is really interesting. So there's an open gap right here. And why is that important? Because it means traders who bought below this bar and tried to buy more lower and get out around break even on their first entry were not able to. So those traders were trapped in. You can see the low of this bar is 44.69. And on this, we never got to 44.69. So there are trapped traders at 44.69 waiting to be able to get out, and they were never able to do so today. And so a lot of them, after the strong pair of bear bars, might start selling out of their longs. So that's really important to keep in mind for the coming days. We might get a bounce back up, but if we do, I think there'll be a lot of sellers up here. Bar 1, bull bar with the tail on the top. It's potentially a double bottom with 76, but we were a little oversold coming into the day. And again, I did think we were going to get up to this price point, but it's not I don't really think it's that reasonable to buy above 1. Again, double bottom for the bulls, but more likely to go sideways, so I'd rather wait. Big bull surprise on 2. And what's immediately notable is that any trader who sold above 1 is now trapped. So it's possible we get a bull trend from open and a big bull trend day. 3, big tail on the top, and there's a tail on top of 2 as well. So, not as strong for the bulls. This is probably going to pull back soon. Typically, once you get a doji, it'll pull back within 2 or 3 bars. 4, big bull bar, but top of a sell climax, probably more climactic than anything. Then you get bar 5, and bar 5 is just too strong. It's way stronger than bulls wanted it to be. And you get, a lot of bulls who are long here are going to be selling out of their longs. And you can note that even, bulls might buy a 50% pullback, but, you can see they probably aren't thrilled about it because of how strong bar 4 is. And any bear who sold above 1 will probably sell more below bear bar closing near its low 5 and look to get out around break even. You can also note that bears who sell below 5 were able to make a 5-point scalp. You can see they made exactly a 5-point scalp. The low of 58 is 58.5. And so their entry price would be 58.25. And it has to go 1 tick past your exit price in order for those traders to get filled. And so 53 is the low, meaning it went 5.5 points past, which means those traders made exactly a 5-point scalp. Now, why is that important? Because if you sell below a bar and here, and you're able to make money on a stop order, it's not a bull trend. So the argument of bull trend for the day, for the most part, goes out the window when you get 5, 6, and 7. And so when you get 5, 6, and 7, now you should be thinking trading range day. And what's interesting is, now that you're thinking trading range day, what's the magnet, right? The 1 high is going to be a magnet, because that traders who sold above 1 and are going to sell more higher should be able to get out at break even, because it is a trading range day. And on trading range days, they're generally very forgiving to traders who are willing to scale in. So that was my thoughts on 5, 6, and 7, especially stop order bears being able to make money. So that these traders are probably going to be able to get out at break even. Bar 8, bull bar. 9, big bull bar, and it just touches the 4 close and then sells off. It sells off because any bull who bought this close was extremely disappointed in 5, 6, and 7, maybe scaled in lower at 50% pullback, and is now selling out of their longs at break even. You can see here, traders who even bought the highest close, they were forgiven. So it's a trading range day. Traders are going to be forgiven. So you're expecting us to touch the one high. 10, bull bar, but it's probably a nested second leg trap. 8, 9, down on 10, below 9, and then up. So it's 2 legs up and potentially a wedge if you include this. So I'm looking at this more as, a sell area rather than a buy area. Bar 11, potentially a double top, potential swing short. You can see also, by the way, that once we touch the 7 close, for the same reason when we touch the 4 close, any trader who sold the close of 7 is disappointed. And you can see on 14, they were let out at break even. That's exactly what they did. And that's how we formed that trading range. But anyways, bar 11, double top, swing short. Follow through on 12. It's not really ideal follow through. On trading range days, you're going to be disappointed a lot. So it's not really ideal follow through on 12. And by the way, I know that I keep saying on trading range days, and you're like, well, look where we closed. And then it's true. We did, it was essentially a bear channel. It was a bear channel from that started yesterday. You have the spike yesterday, and you have the channel. This is really bad drawing, but you can see my point. So it was a bear channel, but it traded like a trading range day, and it had wide swings in both directions. And so in these broad channels, traders can make money in both directions, and limit order traders will still be forgiven. So 14 buyers from around the close of 7, and like I said, 12 is kind of disappointing follow through for bears, but it's still reasonable to stay short. Same thing with 13. In 14, some bears will exit above. It's still more likely that we get a second leg down, but the pullback could be deep because on trading range days, you generally are disappointed and you generally will get deep pullbacks, which you do on bar 15. 16, big bear bar, closing near its low, but you're probably not going to sell below 16. Some traders might try to take a chance, but you can see if 16 triggered, we're probably going to get a second leg down, from bears to the one high, and it never triggers. 17, big bull bar closing near its high, but big bar, big risk, and you're in a tight trading range, and you're buying at the high of what is probably also a trading range. I don't really think this is a very good trade. 18, follow through for bulls, yes, but still the top of the trading range, and it's not closing on its high, and it's really not that big of a bar. I equate it to kind of like 12. 12 was follow through for 11, but it wasn't what bears wanted. 18 was follow through for bulls, but bulls buying above 17 wanted another bar like 18, closing up here, and then hoping for a measure move up of 1 to 4. When they get 18, it's kind of disappointing. 19, another bull close, yes, but big tail, probably not going that much higher, and you get a reversal down on 20. With these tails, this could be a wedge on a smaller time frame. You could sell below 20. If 20 had closed and you're on its low, I was going to take the short, but it didn't, so I didn't. I did sell below 11, and I exited, I think like sometime during 17. There's something really important to ask yourself whenever you're in a trade, regardless of your position in the market, you should be asking yourself, would I sell the market right now? So let's say you're short, I don't know, here or something. You're short and you get 44 and the market starts to turn up and you're still in your short. And a lot of times people will be very biased because of the position they're in. But you need to ask yourself, if I was flat, if I was not in any position, would I sell the market right now? If you're short here, right? Would I short the market immediately right now? And if you wouldn't do it, then you should get out of your position, because that means you don't really believe in the short case. And so why are you in that position? And a lot of times you might find, well, would I buy at the market right now if I was flat? And if you're short, and you would probably buy at the market if you were flat, then you need to get out of that trade. So that was kind of my thesis during 17 as it was starting to turn up. It was around right here, and a lot of times, I figured we were probably going to test the 15 close because traders are going to be forgiven on these kind of days. And I asked myself if I would sell the market during 17 when it was turning up, and my answer was no, and so I flattened. But anyways, 21, follow through for bears, tail on the bottom. 22, doji bar, not really great follow through for either side. This is probably strong enough to get a second leg, and bulls should get the 19 close tested at some point today. They didn't, but it was more likely at this time that they would. 24, buyers below 23. 25, tail on the bottom. You have a lot of tails here. There's not really anything very good to short yet, I don't think. It's still reasonable to probably be short, after 26, I would think, because the one high is such a clear magnet. When we also got to keep in mind there's a 90% chance we break out of the 18 bar range. So most likely if we get to the one high, we're also going to get below one and probably, try to break below yesterday's low, the Globex low. So, probably okay to sell below 26, but maybe not great. Same thing with 27. It's consecutive bear bars. It's technically 4 straight, but consecutive reasonable bear bars closing near their lows, below the moving average. Second bar is fully below the moving average. It's probably okay to be short, but it just doesn't seem all that great. 28, big bear follow through. A lot of bears took the short, and then you get 29, reversal up around the open of the day, and which is what we tested, I believe. Almost exactly what we tested, and the beginning of the buy climax. 30, big tail on the bottom. Basically, buyers below yesterday's low, buyer at a new low on the day. Buyers at a new low on the day, which is not surprising after 1 through 4. And then you get 31, bull bar, test the 27 close. See sellers there. We did sell off, and you can look and you can see that 39 tests the low of 31. Why does it test the low of 31? Because it's a bull bar. And so some bulls will buy below it, and it's a trading range day. So the bulls who buy below, buy more lower, are going to be able to make money. That's one of the reasons why it's kind of hard to think that, this was going to happen, is because bulls were able to make money and they had a couple of good bull bars here. But anyways, 33 follow through, but it's getting pretty climactic, but it is a tight bear channel. It's okay to be short. 34, more follow through for bears. First reversal up on 35, probably going to fail. I think it's an inside bar on 36. And then big bull bar 37. Could consider it an outside bar, even though it didn't quite go outside. It's probably going to act similar to one. And a lot of traders will exit above 37. 38, bull bar 39. You can see we test that low. And then you get 40. I'm kind of conflicted on how I feel about selling 40. I think you can sell it for a swing, but you need fast follow through. And I don't think 41 is good enough follow through. I think if you sell 40, you want to see, a big bear bar closing near its low at a new low. When you start to get support at a new, like around here, a lot of traders are probably going to exit their shorts. And it's possible that when we got 42, that's the reason 43 happened, is because a lot of those bears saw the, this follow through is good, but this is a magnet and we're not exactly racing away from it. So it's possible that it's not as good as you want it to be. 43, bull bar, but not a strong close. We're still probably going to get back here, but I think if 43 closed really strong, a lot of bulls would have bought, looking for this to be a midday reversal, kind of expecting a bounce. And it didn't close very strong, and so a lot of bulls just gave up. Any bulls who are buying around down here will just give up, and they get a big sell climax on 44. And if you look at 44, it's the best bear bar on the day so far. So while it's likely we're going to, so when you get a climax, 60% chance it's the end of the trend, and 60% chance you're going to get another leg down, and 46 qualifies as that other leg down. I think 45 is an okay low probability swing trade, because that the bulls who buy below 43 are probably going to be able to get out at break even. Probably going to be able to get out at break even. And so it's hard to hold long after 46, and then you get 47, and 48 is a low too. So a lot of traders would probably be out. And if 49 had closed on its high, consider this bear breakout. So bears are considering this bear breakout, two-legged pullback, sell below 49. This is a pullback on sell below 48 and 49. And bulls are looking at it as essentially a wedge: 1 push down, 2 pushes down, 3 pushes down, and a potential buy above 49. 49 closed stronger, I was going to take it, and 50 gets reasonably good follow through. I think you can buy above 50, but it's kind of hard to do with this low. But a lot of bulls were eager to buy somewhere in here, and they weren't quite able to get long. And so when you get 50, it's enough follow through that a lot of traders, because there's a lot of eager bulls waiting here, and they're not quite getting what they want. And so a lot of traders, I kind of think of it as a reverse give up. Here, bulls give up and they just sell the market and they just get out. And here, bulls are like, this isn't quite good enough, but I really think we're going up, because you see this untested magnet, and so they really think we're going up, and so they'll just kind of give up on looking for a great signal bar and just buy the market. And that's kind of what happens on 51 and 52, big bull follow through. So you get the II 53, 54, like I talked about, and big sell climax on 55. Trading ranges have a lot of these big, give up and essentially reverse give up bars, like I was talking about. Here, this is a good II. And so a lot of traders, seeing a good stop order trade on a trading range day is pretty rare. So they sell it and get big follow through. And when you get down here, a lot of those traders just take their scalp. 55 is good enough for a second leg, but also probably the bottom of a trading range. So probably buyers. So traders who sell, who are short, know it's probably going to be one more leg. But when you get 57, we're probably going to test the 56 low, and it's probably not going to be all that good. And then you get 58. Huge bull bar, probably going to test these highs and the open of the day, but you have to keep in mind 57. And since it's a trading range day, we're probably going to get back to the 57 low. 59, good follow through for bulls. It's not the best. Tail on the top, not quite closing above the breakout point, but it's not bad. And then 60 and 61, essentially with this tail here, makes this a second leg up on 61. So it's 2 legs up. And then you get 62. I wouldn't sell here. Some bears will sell the close of 63, seeing it as, a breakout and a breakout pullback, and they can sell the close knowing we're probably getting to the 57 high. And they probably have trap traders up below 62. But you can see on 64, we do test the 62 low, and any bulls who were trapped on who bought below 62 didn't like 63, sold out during 64, and we basically tested right at the 57 high. I thought that it was more likely we were going to go sideways into the close, but we ended up, this is an expanding triangle, by the way, 0.1, 0.2, 0.3, 0.4, 0.5, and then we sold off. Expanding triangles typically have, I believe, 3, 5, or 7 points. But I could be making that up. I know 5 is the most common, but I think it's 3, 5, or 7. So 67 follow through, 68 follow through. We're at the bottom of this trading range here. And then you get a big give up bar, 69. Probably bulls buying below 66, didn't like 67, and then see 68, and they just give up, taking their loss, out of fear of a sell the close finish, which is essentially what we got. And then you got big bear bar, 69, probably buyers below, but probably one more leg down. And then you get 70, and 71 is up and technically a pullback and could qualify as the second leg down. And I thought 72 was a reasonable buy for the same reasons I've kind of been saying, in that I think it's a trading range day. And so you could buy above 72, kind of betting that the gap with the 57 low is going to close. And if you get really lucky, you might even get the gap with the 66 low to close. It's unlikely that the gap with the 66 low would close, but I thought it was a reasonable enough probability, maybe even 60%, probably at least 50-50, that buying above 72, you're going to get back to the 57 low because it's a trading range. But 73 traded down first, which I did not like. I think if 72 is going to go, it's going to race up almost immediately. And you could, like I said, you might get back to here, you might get back to here. And like 10% of the time, you'll get back up to here, but it's not even worth considering. Because it's a trading range day, and that's the open of the day, and the open of the day is a magnet on trading range days, but you're probably not going to get, 20 plus point swing in the last 6 bars of the day. It's just, 1, 2, 3, 4, 5, 6, 7, 8, 9 bars of the day, I guess. But it's very easily we could get to here. But the tail on 73 makes me uncertain, and the tail on top of 74 makes me uncertain. Or sorry, the tail on 73 makes me uncertain, and the tail on top of 73 makes me uncertain. So a lot of traders, when they see that, they just scalp out during 74, and that's what causes the selling. Probably buyers below 74, since 72, 73 good enough for a second leg up, which is what 75, 76 was. And you can see on 76 or 77 goes down. Traders who bought below 76 bought more lower. They get out during 78. Yeah, I already talked about the daily chart. I'm going to go over it one more time because I think it's really interesting what's happening. I think that if we get back to this low, there's going to be a lot of buyers or a lot of sellers. But the fact that bears were able to get follow through while keeping bulls trapped is really impressive. There could have been support here. I thought there'd be support around here. It looks like we're probably going to try and test this, and we'll probably end up finding support somewhere down here. I think that, the next obvious, we're probably going to find support here because it's the beginning of the bull channel and the bull spike. But there was this gap that we created back in June. And there are bears who sold above here who are waiting to get out of break even, who are obviously disappointed in this follow through. And so anyone who sold above there, you should know it. When we get here, there's probably going to be support. So I would pay a lot of attention to this. I'd probably pay a lot of attention to this as well. Just curious about something interesting. So yeah, I would just pay a lot of attention to that. And that is